Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is a historic candy company a good investment? In this video we will be analyzing if Tootsie Roll stock is a buy. Could Tootsie Roll, stock ticker symbol TR, be ready to rebound higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Tootsie Roll. Launched in 1896 with the popularity of a single product, the iconic Tootsie Roll, Tootsie Roll Industries has grown into one of the country's largest candy companies. Headquartered in Chicago, Illinois, they manufacture and sell a beloved lineup of confectionery brands that includes Tootsie Rolls, Tootsie Pops, Dots, Junior Mints, Blow Pops, and more. Their commitment to quality and nostalgia has made them a favorite for generations. Today, Tootsie Roll Industries distributes its candies across North America and in over 75 countries worldwide. Now let's look at the price action. Starting with the 1-year chart, we see that Tootsie Roll had a CAGR of about -15%. Zooming out to the 5-year chart, we see that Tootsie Roll had a CAGR of -2%. Tootsie Roll has not been much of a grower over the long term and is certainly in the midst of a pullback in the short term. No gain in 5 years is a bit disappointing. If we compare a $10,000 investment in Tootsie Roll Industries to the S&P 500 over a specified period, Tootsie Roll trails the S&P 500 in nearly every metric. Despite starting at the same $10,000, Tootsie Roll's ending balance of $10,925 falls short of the S&P 500's $18,133. This translates to an annualized return of 1.98% for Tootsie Roll compared to a significantly stronger 14.14% for the S&P 500. Even volatility is higher for Tootsie Roll with a 29.75% standard deviation versus 18.93% for the S&P 500. While both investments experienced similar worst year performances, -18.76% for Tootsie Roll and -18.17% for the S&P 500. Tootsie Roll's best year return of 27.37% lagged behind the S&P 500's 28.75%. The maximum drawdown, a measure of peak to trough decline, also tells a similar story. Tootsie Roll's maximum drawdown reached 33.35%, deeper than the S&P 500's 23.93% decline. Finally, risk-adjusted return metrics like Sharpe ratio, 0.13 for Tootsie Roll, 0.68 for S&P 500, and Sortino ratio, 0.23 for Tootsie Roll, 1.06 for S&P 500, further emphasized Tootsie Roll's underperformance compared to the S&P 500. Now let's hop over to market share and take a look at Tootsie Roll's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under food and see that Tootsie Roll is categorized as a confectionery company. Expanding the confectionery tab, we can see that Tootsie Roll has the smallest market share of the 3 confectionery companies listed, but it does appear to be gaining market share. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Tootsie Roll, TR, and see that the market share is 0.09% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Tootsie Roll attracts almost no food spend but has been growing market share. The 5-year market share CAGR for Tootsie Roll is 6.4%. This means that Tootsie Roll's market share is outpacing growth in the wider industry. If we start in 2020, we see that the market share was 0.073%. 0.076% in 2021, 0.083% in 2022, 0.09% in 2023, and down to 0.089% over the trailing 12 months. Notice the slight decline from 2023 to the trailing 12 months. I am worried that this may be the beginning of a downwards trend. Let's take a look at the fundamentals to learn more. Gross margin is 34%. This is much lower than similar confectionery companies. Revenue has compounded at around 16% over the past 5 years and has reached over $761 million most recently. Tootsie Roll's revenue had been growing very nicely but has started to decline during the trailing 12 months. When we look at cash flow, we see a 17% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 12% CAGR. As a result, free cash flow has grown at an 18% CAGR. Tootsie Roll looks pretty decent here. Growing operating cash flow faster than capex is a recipe for free cash flow growth, albeit at a very pedestrian pace. Weighted average shares outstanding have fallen over the last 5 years, going from 74.8 million shares in 2020 to 71.7 million shares most recently. Tootsie Roll has been buying back shares. This is what I like to see. Tootsie Roll is using their free cash flow to buy back shares, improving the per share metrics. Now let's view return on invested capital. Return on invested capital has grown from 6.5% in 2020 to 10.3% most recently. While this value is not that great, it is a decent value and the overall trend has been upwards. Hopefully, Tootsie Roll can continue to improve investment efficiency. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 90 days in 2020 to 90 days most recently, Tootsie Roll has made a round trip in inefficiency but still remains at a high value, indicating subpar performance. Now, let's look at Tootsie Roll's debt. The net debt to EBITDA has actually increased over time, going from -2.6 in 2020 to -1.1 most recently. However, with the value being negative and Tootsie Roll being profitable, we know that the company has more cash on hand than debt. This is a great position for a food company to be in. Last, let's explore dividends. Current dividend yield is 1.18% with a dividend payout ratio of 27%. Tootsie Roll is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at a 2.8% dividend per share CAGR over the past 5 years and a 4.2% dividend per share CAGR over the past 10 years. Tootsie Roll dividend history is clearly healthy, though the dividend growth rate is pretty low. Tootsie Roll looks kind of sweet. In any event, should it be added to the watch list? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Tootsie Roll. It is a food company with a gross margin of 34%. The 5-year revenue per share CAGR is 17% and the 5-year free cash flow per share CAGR is 20%. While the gross margin is somewhat low, revenue and free cash flow growth are decent. A return on invested capital of 10% is low but improving. Next, the cash conversion cycle of 90 days is ridiculously high and seems to be getting worse. Concerning debt, a net debt to EBITDA of -1.1 means that Tootsie Roll has more cash than debt. So from a fundamental standpoint, Tootsie Roll has some good points and some bad points. Now let's switch our attention over to valuation. Tootsie Roll is undervalued relative to the S&P 500 with a ratio of 0.7. The price to earnings growth, or PEG ratio, is 2.5, indicating that Tootsie Roll is overvalued relative to their projected earnings growth. Tootsie Roll is a classic food company. They went public in 1919 and have survived many competitive threats and macroeconomic challenges. This nostalgic company behind some of our favorite childhood treats like Tootsie Pops and Dots has been on the shelves for decades. But clearly the share price has had little growth to speak of. However, there have been bright spots. The company has seen some decent revenue growth recently, and their dividend record is pretty solid. They've consistently paid out a share of their profits for years, making them a potential option for dividend investors. For value investors, Tootsie Roll is in the midst of one of their largest drawdowns of the last decade, so this candy giant might be worth a closer look. If you're looking for high growth potential, Tootsie Roll might not be for you. While I am a bit seduced by the potential for a value play, I think there are better opportunities currently in the market. For me, Tootsie Roll is not going on the watch list. Many thanks for watching. What do you think about Tootsie Roll and microscopic growth over the years? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.